80. You are about to hear something that will make you feel sick. 57% of Americans have no life insurance. That is over 150 million people. And here is the number that should terrify you. 1 in 3 families would face financial hardship within 1 month of the primary earner's death. Not a year, 1 month. The mortgage, the car payments, the utility bills, the grocery bills, they do not stop when you die. They keep coming, and your family will be left to figure it out. Without your income, they will have to sell the house. They will have to pull the kids out of extracurriculars. They will have to borrow money from relatives who do not have it to give. Your family will not just grieve, they will resent you. They will hate the fact that you left them with nothing but debt and memories. By the end of this video, you will understand exactly what happens to your family if you die without life insurance. The 3 financial disasters that unfold immediately, and the one simple, cheap solution that every family can afford. I will break down the cost of a funeral, the impact on your mortgage, and the long-term damage to your children's future. You will learn why Social Security survivor benefits are not enough, why your savings will be drained in months, and why term life insurance is the single best gift you can leave your family. If you love your family, you will watch this video to the end, and then you will buy life insurance. Let me start with the most immediate disaster. Your funeral. The average funeral in the United States costs over $8,000. That is for a basic service. Add a cemetery plot, a headstone, and a viewing, and you are over $10,000. Without life insurance, your family has to come up with that money immediately. They will drain their savings. They will borrow from friends. They will take out high-interest loans, or they will have to have you cremated and skip the service. That is not how you want to be remembered. That is not the legacy you want to leave. Now here is the second disaster, your mortgage. Let us say you have a $250,000 mortgage with 20 years left. Your monthly payment is about $1,800 including taxes and insurance. Your spouse earns $40,000 per year. That is about $3,300 per month before taxes. After taxes, perhaps $2,800. Your mortgage alone would take nearly 2/3 of their take-home pay. They cannot afford it. They will have to sell the house, likely at a bad time, incurring realtor fees and moving costs. Your children will have to change schools. Your family will lose the home you built together, all because you did not spend $20 a month on a term life policy. The third disaster is the long-term financial devastation. Your spouse will have to work more hours, take a second job, or rely on government assistance. Your children will lose access to extracurricular activities, tutoring, and possibly college. The stress will affect their mental health, their grades, and their future earnings. A study found that children who lose a parent are significantly less likely to graduate from college. That is a lifetime of reduced earning potential. All because you did not spend the cost of a pizza per month on life insurance. Now let me address the common objections. People say, I have savings. My family will be fine. Let us test that. You have $20,000 in savings. Your funeral costs $10,000. That leaves $10,000. Your mortgage is $2,000 per month. That is 5 months. After 5 months, your savings are gone. Your spouse's income is not enough. They are now in debt. That is not fine. That is a crisis. Another objection. I have life insurance through my job. That is a start, but most employer-provided life insurance is only 1 or 2 times your salary. If you earn $60,000, that is $60,000 to $120,000. That might cover the mortgage for a few years, but not college, not retirement, not the lost income for decades. And here is the kicker. If you lose your job, you lose the insurance. What if you die between jobs? Your family gets nothing. You need your own independent policy. Another objection. I am young and healthy. I do not need it. Young people die from accidents, from undiagnosed conditions, from violence. It is rare, but it happens. And when it happens, the financial impact is even worse because there has been no time to save. A 25-year-old with no savings and no life insurance leaves behind debt and funeral costs that their parents will have to pay. Is that what you want? So let me tell you about the solution. Term life insurance. It is simple. It is cheap. A healthy 30-year-old non-smoker can get a 20-year, $500,000 term policy for about $25 per month. That is less than your Netflix and Spotify combined. For $25 a month, your family gets $500,000 tax-free if you die. That money pays off the mortgage, funds the funeral, replaces your income for years, and puts your kids through college. That is not a luxury. That is a necessity. What about a stay-at-home parent? They need life insurance too. The cost of replacing childcare, housekeeping, and all the unpaid labor is enormous. A $250,000 policy on a stay-at-home parent might cost $15 per month. That is the price of one meal at a fast food restaurant. Now, let me walk you through the math of what happens without life insurance. You die at age 40. Your spouse is 38. Your children are 10 and 8. You earn $70,000 per year. Your spouse earns $40,000. Your combined income is $110,000. After you die, your spouse's income drops to $40,000. That is a loss of $70,000 per year. Over the next 10 years, until your youngest turns 18, that is $700,000 of lost income. Your savings might cover a year. Your employer's life insurance might cover 2 years. Your family is still $500,000 short. That is the hole you left. Now, let me tell you what Social Security survivor benefits actually provide. If you die, your dependent children may receive a monthly benefit until they turn 18. For a family with 2 children, that might be $2,000 to $3,000 per month. That is helpful, but it does not cover everything. It does not pay off the mortgage. It does not pay for college. It does not replace your future earnings. And it stops when the children turn 18. Your spouse receives benefits only if they are caring for a child under 16. After that, nothing. Social Security is a safety net, not a complete solution. So here is your action plan. Step 1. Calculate how much life insurance you need. A common rule of thumb is 10 to 15 times your annual income. If you earn $70,000, you need $700,000 to $1,050,000. Step 2. Include your spouse. Even if they stay at home, insure them for $250,000 to $500,000. Step 3. Get quotes online. Use a comparison site. You will be shocked at how cheap it is. Step 4. Buy a term policy that lasts until your youngest child is independent, usually 20 to 30 years. Step 5. Name your beneficiaries. Keep the policy document somewhere safe. Tell your family about it. Do not wait. Do not say you will do it next week. Do not say you are too busy. The average funeral costs $8,000. The average term life policy costs $20 per month. Which one can your family afford? If you die without life insurance, your family will not just grieve. They will struggle. They will resent you. They will hate the fact that you left them with nothing. Do not let that be your legacy. Let me give you a real-world example of the right way. A father of 2 in Michigan bought a 30-year, $1 million term policy at age 30 for $40 per month. He died at age 55 from a heart attack. His wife received $1 million tax-free. She paid off the mortgage, put the kids through college, and had enough left over to retire comfortably. She still misses him every day, but she is not financially ruined. That is the gift of life insurance. Now let me give you an example of the wrong way. A father of 3 in Texas had no life insurance. He was healthy, 45 years old, and thought he did not need it. He died in a car accident. His wife was left with a $300,000 mortgage, 2 car payments, and no savings. She had to sell the house, move into a small apartment, and take a second job. The children dropped out of sports and music lessons. One child could not afford college and took out massive loans. The family is still struggling 10 years later, all because of a $20 monthly premium that seemed unnecessary. Let me also address the UK and Canada. In the UK, the same principles apply. A 30-year-old non-smoker can get a £250,000 term policy for about £15 per month. In Canada, similar coverage costs about 25 Canadian dollars per month. The consequences of dying without insurance are the same: debt, loss of home, and financial struggle for your loved ones. Let me recap the key takeaways. Number 1, over half of Americans have no life insurance. Their families are one death away from financial ruin. Number 2, the average funeral costs over $8,000. Your family will have to pay that immediately. Number 3, without life insurance, your family will likely lose your home. The mortgage payment alone will be unaffordable. Number 4, your children's future will be impacted. They may not be able to afford college. Number 5, employer-provided life insurance is not enough. It typically covers only 1 to 2 times your salary, and it ends when you leave your job. Number 6, Social Security survivor benefits are limited and temporary. They do not replace your full income. Number 7, term life insurance is incredibly cheap. A healthy 30-year-old can get $500,000 of coverage for $20 to $30 per month. Number 8, the best time to buy life insurance is today, not tomorrow, not next week. Today, here is what I want you to do right now. If you do not have life insurance, open a new tab. Go to any comparison site. Get a quote for a 20-year term policy for 10 times your annual income. Look at the monthly premium. It will likely be under $50. Then ask yourself if your family is worth $50 a month. If the answer is yes, buy the policy. It takes 15 minutes. You will sleep better tonight, and your family will never have to hate you for leaving them unprotected. If this video convinced you to buy life insurance, hit the like button. It helps more people see the truth about what happens after they are gone. Subscribe and turn on notifications so you do not miss my next video, which is called The One Mistake That Makes Your Life Insurance Policy Worthless. And comment below. Do you have life insurance? If not, what is stopping you? Be honest. I read every comment. Thanks for watching. Now, go protect your family. See you in the next one.